Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Arizona Metals Corp. Please note, you can submit questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Mark Pace, President and CEO of Arizona Metals Corp, which trades on the OTCQX Best Market under the symbol AZMCF and also on the TSX under the symbol AMC. Welcome, Mark.
Thank you, Eric. Welcome everyone to this update on Arizona Metals Corp. I know we have a number of current shareholders here, but I'd just like to first give a quick overview before answering some questions. We did also attend, last month we attended two conferences in Zurich, the Zurich Precious Metals Summit with a copy of that presentation on our website, as well as last week we were at the Swiss Mining Investment Conference where we met over 30 institutional funds as well as high net worth investors and family offices. Last month, we also had a number of site visits of new and current investors to the project in Arizona, and we're planning more of those same investor site visits for January and February in the new year. Just to summarize, Arizona Metals, yeah, quick look at our forward-looking statement, but just to give you a brief description of what we see, the unique opportunity we have here with Arizona Metals. We own 100% of two projects. The primary asset is the K Mine, which is a very unique project. It's one of the last high-grade copper, gold, zinc, VMS deposits left in the world. These deposits were typically mined in the last century, high-graded, where the copper, gold-rich deposits were taken out of the ground. Very few left. The current ones being mined tend to be the lead zinc deposits, which are now either being built or in operation. K was a unique situation where the deposit was orphaned in the 80s. No work was done on the deposit until we picked it up in 2019. So about 40 years of dormancy. We started drilling, started off with an Exxon historic resource, what would have been considered marginal at the time, 6 million tons at 4% equivalent in their historic reserve. That was calculated at 60 cent per pound copper, a very high cutoff grade, 2.5% copper equivalent. Just based on that, we see, the potential for significant expansion, and that is what we are seeing in the drill results. We'll go through some of those. As I mentioned, we'll go through some of the highlights, but the K deposit located on private lands. The rest of our claims are Bureau of Land Management. We have been acquiring private land around the deposit for infrastructure. We have underground water rights. We do not draw from any surface waters. We are not near any indigenous or tribal lands. No endangered plants or animals on the properties. We believe that we have all the elements you need to put this deposit back into production. But very significantly, this would be very high grade, very low footprint deposit, which is obviously important for the permitting, but also for the eventual economics. We can produce a lot of metal output for movement of very low tons of material, which implies the potential for very low capital cost as well as very low operating costs. Additionally, we are fully funded, $40 million in cash roughly, well financed to complete the upcoming work programs, which is a combination of taking the K Mine deposit towards a resource as well as testing the surrounding target areas. So I'll go through in some of the sections of where we are with the work underway. Currently, our market cap is around 250 million Canadian. I'd say we're down significantly in market cap, similar to our peer companies, but where we differ is we have a very strong balance sheet, 40 million in cash, and we also have a very strong liquidity. We're trading roughly $1.5 million per day on the TSX, as well as another $500,000 per day on the OTCQX. And as I mentioned, we're fully funded for at least the next 12 to 24 months. The K deposit, an hour north of Phoenix, surrounded by operating mines. The bulk of those deposits, or those mines in production right now, are open pit mines. K would be very different. This would be a small footprint underground mine, similar to the mines that started the copper industry in Arizona, and I'll go through some of those. Our secondary asset, Sugarloaf, not the focus at the moment, but we do see great value there, and I'll run through those at the end. That's 2 hours west of Phoenix. The goal is to spin that out during 2024. The work is underway to do that. That would obviously go to a shareholder vote, but we do think that excellent potential to have a multi-million ounce deposit there, and a very, very simple exploration model, which I can outline some of the potential at the end of this presentation. As I mentioned, the K deposit last explored in the late 70s, an hour roughly north of Phoenix in a prolific historic VMS trend. 60 past producing VMS mines around us. What distinguishes these deposits is they're high-grade underground mines. The big deposit north of us, an hour north, United Verde, was the mine that started the copper industry in Arizona, produced at 5% copper in the open pit for almost 90 years, and then went underground, was producing underground at 10%. You compare that to the average copper mine today. Open pits in Arizona are running at 0.3 to 0.5% of the open pit, so this was 10 times higher grade. And a good underground mine right now might be, Kid Creek, LaRonde running at 3 to 3.5% copper equivalent at 3 to 4 kilometers deep. United Verde was running at 10% copper equivalent at only a few hundred meters deep. So when Exxon had the K mine, 1982, that internal reserve that they produced, 4% equivalent, that looked marginal in 1982. But at today's copper prices and with the other metals that we have with this deposit, this would be a very high grade deposit. And keep in mind, this was tested by Exxon to only 450 meters deep. We're getting excellent drill holes down to at least 900 meters deep. As I mentioned, another key highlight, K deposit is not located near any national forests. K itself is on private land, very important for permitting. The rest of our exploration claims are on BLM, Bureau of Land Management, which are federal mining claims, which have a very well outlined path to putting a mine into production, compared to, say, the Forest Service, which can cause issues. But also importantly, we're not on or near any Indian tribal lands. And also we've done independent biological studies to show no endangered plants or animals on our claims. Those are also key things to putting these mines into production. So our first program, when we started drilling, the deposit had sat dormant for 40 years. We first did a 10,000 meter program to test the historic resource by Exxon. Their resource was focused in the copper-rich zones, and you can see we got some really excellent numbers: 43 meters at 4% copper equivalent, 39 meters at 3.4%. Compare that to your typical VMS deposit in operation, might be using a minimum mining width of 3 meters with a cutoff grade of 1.5%. So, good deposit might be running 5 to 15 meters true thickness. We're seeing just in this copper zone, 25 to 35 meters true thickness at very high grades. The next step then was to start looking around where Exxon had tested, and I'll show you some of those results. So, quick overview of the land position. The green outline on the right is the private land which hosts the K deposit. Very important, for permitting, that it is on private land. The BLM is the blue claims around it, where we have our exploration targets, but where our targets are go only about 1.5 kilometers west of K. So the implication is that anything we find on those claims would go into the same mining operation potentially. And, obviously, anything you access from underground means you're not disturbing the surface, which is obviously better for permitting. We have also been acquiring additional private land. So 2021, we acquired to the northeast, just 900 meters north of K. You can see the purple outline that was around 107 acres that we acquired. This month, we're going to close on an additional 50 acres. Which gets that piece up to around 150 acres, and we've kind of been estimating that for a decent size operation, you need 3,000 to 6,000 ton per day operation. You probably need something like 90 to 180 acres of land. We should have significantly more than that by January, all private land, and importantly, that land has its own underground water rights. So we're not drawing water from any surface waters. We're not taking any waters from the local community, and very importantly, the water, our land position on water rights is not in any kind of active management area for water. So we're not in an active management area to protect downstream waters. And I think also worth noting that this K mine was kept open 3 times in the last 100 years for a number of years, 1907 to 1912, 1950 to 1955, and then by Exxon from roughly 72 to 78. All those times when the deposit was open and being dewatered, explored underground, had no impact on the local ecosystem or water system. So I think that's very good prognosis for future permitting. But we are, of course, doing our own independent hydrological studies, rock geochemistry. We're doing all the elements that would go into an eventual mine permit as well as feasibility study. As I mentioned, the K deposit on the right here, you can see where it says K mine deposit. That covers around 350 acres of strike length, or 350 acres of the potentially mineralized zone. The purple line you see folding back and forth is the mineralized contact between the yellow felsic host rock, the mafic green rocks. So all the 60 past producers going 100 miles north of us are all in that yellow felsic rock. So K is in that rock. We have 10 kilometers of that strike going west of our property, but that 10 kilometers is being folded into only about a 1.5 kilometer area across, which is, as I mentioned, very important for future discoveries we think would go into the same operation as the K mine. So anything we discover outside of K becomes directly accretive to the future NAV, NPV of the project. We have to date explored less than 10% of that 10 kilometers of strike outside K. We've drilled about 4,500 meters on the central target and had one very good hit just north of the central target, which I'll show you. And we've drilled 8,000 meters, only 8 holes in the western target, but one of those 8 holes returned what we consider to be a discovery hole. 3 meters at 3 grams, which includes about a meter running almost 10 grams per ton gold equivalent in the right type of mineralization. We think both of those hits are potentially on the edge of a larger system. They're very similar to the mineralization you would see on the fold limb of the K deposit. What we're obviously looking for is going from a limb to a thicker fold. So the upcoming program for 2024 will be a combination of drilling at K to get it towards a resource, but also testing follow-up holes on those central and western holes to see if we can expand those into some thicker widths. And I will show you a few maps of where those priority targets are for the coming year. As I mentioned, we have done a lot of recon work on K. We've done soil, full soil grid on the property, electromagnetic helicopter EM, ground loop EM, gravity, and we just recently completed a property-wide rock grid sampling program, which is outcrop sampling. And that's, 2 purposes to that. One is to put into our plan of operations, which will be filed imminently as soon as we have those final results back. The purpose of the plan of operations is to allow us, well, there's 2 reasons. Expanded drill pads. So currently we have 12 pads permitted under the notice of intent, which allows 5 acres of disturbance, which is a combination of roads and pads. That gives us a lot of area to continue testing K and outside. I'll show you on the next map what we're looking for here with the plan of operations. So you can see these black ellipses are priority targets outside of K. We've had a few very good hits directly north of K. In the north central zone, we had 3 meters of 0.5%. In the west, where it says west, with 3 meters of 3 grams gold equivalent. Our NOI allows us to test the majority, almost all of these targets, but a plan of operations would allow us to expand well above 5 acres of disturbance. But to do that, we do need to, we had to complete some additional work, which was the rock grid sampling, which is now complete, and also the drill holes we completed at central and west are, an important part of that plan of operations. The plan of operations will also serve twofold purpose. It also serves as a stepping stone to the eventual mine plan. So we can continue to drill the targets outside of K under the notice of intent while we wait for the plan of operations. But the plan of operations, is an important de-risking, as well as giving us additional pads to the southwest and northwest of the property. it's also a very important stepping stone in the eventual permits, receiving the eventual mine permit for the project. So just to jump back a bit to where we are with K, we drilled to date roughly 80,000 meters at the K deposit, which are the red dots that you see. The red ellipses that are open at the top of the deposit and on the north side, which is on the left, those are areas that are open. We have estimated it's going to take another 30,000 meters of drilling to complete those areas. And the reason for that is we want to have a robust resource where we haven't left anything out. Those are relatively easy targets for us to drill. We budgeted approximately $13 million to drill that 30,000 meters, and it's an estimate based on the geology. What we encounter may increase or decrease that amount. If there's little mineralization there, there'll be less drilling. But if there's more, obviously, hopefully it's shallow, then that we'll adjust as we see what's coming out the ground. But we have already drilled 5,000 meters of that 30,000 meter estimate, which leaves 25,000 meters to complete. We've budgeted around $10.5 million to complete this drilling on the K deposit, compared to our treasury of $40 million. And we are also, right now working on a plan to drill the targets outside of K, north of K, the central west, as well as the west and the northwest. And I'll go over some of those. But as you can see, some excellent grades and widths. We've been hitting 60 to 90 meters at 5 to 10 grams per ton gold equivalent. True thickness of those holes is around 80%. So really a 60 meter true thickness zone running down the hinge of the deposit. And we've drilled it to 900 meters, but many of the deposits around us were mined down to 1.5 kilometers deep. And not to say mineralization ended there. In many cases, it probably goes much deeper, but that was the limit of the mining technology when those mines closed in the 70s. We obviously think there's great potential for K to be, significantly deeper than the 900 meters we've drilled, and we are looking at putting a few much deeper holes in next year. Those might not make it into a resource, but it's really just to show the market that over time, this deposit could grow to be much bigger. But our focus at the moment is on shallower holes for the resource to get, obviously, shallower holes is quicker and lower cost drilling. So currently we have around 14 drill holes at the lab with 2 holes underway. We have focused on the shallower part of the deposit. You can see some of the blue dots at the top. We've added a significant number of those blue dots in the last few weeks. I mentioned 14 holes, one of which is the final hole from the western target. So 13 holes from K itself. We hope to release, I'm hoping roughly half of those before the year is out. And we'll just release them as the lab gets them back to us. And some of the areas you can see on the left side here, that's the north side of the deposit. We think there's potential to add significant tonnage in the shallow part of the deposit, but on the north side too, we hit a hole 10.5 meters running 6.2% copper equivalent, very shallow hole, only about 350 meters deep. In your normal VMS deposit, that would be an excellent hole. It's not as wide as some of our 60-meter holes, but 10 meters at 6% can still add significant tonnage. So we're following up in that area. We think we can add some significant tons. And, these are shallow tons that we wouldn't want to leave out of a resource, especially if they're, easily accessible. So we're drilling those right now. And as we see what comes out the ground, we follow up in areas where we can add tons. As I mentioned, on the west, we drilled 8 holes. It took a lot longer than we expected. These were 1,000-meter holes. And part of that was to get, to the edge of our claim boundary as far as we could and cover all the potentially mineralized felsic units. All 8 of those holes hit mineralized horizon, so elevated copper and zinc. And we see a trend of increasing grade going from south from the bottom of the page up to the north, and you can see the western target area. We also completed a few rock outcrop samples. We've got a much wider grid right now, and I mentioned those results are pending. But even in the few that we did initially, you can see some excellent outcrop grades, 5% copper, 3%, 4%, 5.2%, just to the east of that mineralized horizon. So we're seeing all the right signs, and we're seeing the right signs in the drill core. I mentioned hole 113, the northernmost hole, hit 3 meters at 3 grams gold equivalent, including about a meter of almost 10 grams. We're seeing the kind of mineralization that you see at K as you approach the deposit. So there's a big target area to the northwest. There's a few ways for us to reach those. We can go from pad W2. Another way is to amend our current NOI, which is what we're looking at. So we have 5 acres of disturbance. We can move pieces around where, say, we take some disturbance away from the southeast end of K where we're not using the roads and the pads and move them up here. And obviously, the longer term goal is to put a whole lot of plans here under the plan of operations, but we're expecting to have that later in 2024. The western target also has a number of areas where we've hit mineralization, but you can see here you've got a very thick, 2 thick felsic zones, the yellow unit, that are potentially mineralized. This is where we hit the 3 meters of 3.2 grams. One way to test this is to follow to surface. So there's 2 options: follow it further north, but follow it up to surface. As you can see right above it, we hit 4% copper in surface outcrop with 0.2 grams of gold. So a very, very good outcrop hit, and you can see it's directly above 600 meters above where we got that 3 meters. So what we would be looking at here is tracing this to surface. So putting in much shallower holes, which obviously much cheaper and faster to drill than 1,000-meter holes. So say drilling somewhere towards the 200 to 400 meter depth, trying to pass through those 2 felsic units and testing, does the mineralization thicken as you go at surface? It's common in K. We see pinching and swelling as you go up and down. So that's going to be an upcoming target for 2024. And as I mentioned, you can see here, these are some of the mineralized intercepts from the 8 holes that we just completed at the western target. Everything above it, you got 600 meters of area above it that's potentially mineralized, that we can test all of that strike to see, does it thicken above the known hits. And then also to the north, as I mentioned, there's a potential to put in additional pads. Same thing for the more central, where we hit 3 meters of 0.5% copper, north of where we were expecting from the central target. But there is a number of areas there that we can test with the pads currently in place, or make some very minor amendments to the NOI to put a few holes into that and look for same idea. Can we get wider zones of that 3.5%? 3 meters of 0.5% looks like the limb of one of these deposits. We're looking for the fold hinge, same as at K. So we, right now, roughly budgeting 2 to 4 million for next year to test those targets, which would be, I would say, kind of 2 to 5,000 meter, actually a bit more, 5 to 10,000 meter program to test most of these targets on this page. And the goal obviously would be to start with shallower holes, but the exact location of those is going to be subject to our rock sampling program, which we should have results in the next, before the end of the month, likely in the next week or so. And then, just so I have enough time for questions, give a brief overview of Sugarloaf. Sugarloaf's located 2 hours west of Phoenix. This is a very different type. This is a open pit type deposit, open pit type target. Also last drilled, the historic resource estimate, the historic estimate was done in 1982. 1.5 million ounces at 0.5 grams. That's the purple area, kilometer of strike by 300 meters wide. But very importantly, starts right at surface and no dip to it. So potential for very low strip ratio. But also importantly, if you look at this section, this long section, the green area just defines the historic estimate, the 1.5 million ounces. That was defined to only 70 meters deep. We have drilled a few holes into this deposit, which go almost 400 meters deep. But once you get below a certain depth, it's dominated by sulfide. So the question was, this looks like it can be much larger than 1.5 million ounces if you just test the strike extent at surface. So if you go northeast to where it says H and northwest to H and then southeast to H prime, potential to really increase the 1.5 million ounces just at surface, but maybe multiples of those ounces if you go at depth, but only worth doing if it's recoverable. So this year we announced a few weeks ago, that we completed met testing, getting very good recoveries up to 95% in the oxides, which is what you'd expect, but also 85 to 92% recoveries in the sulfide portion of the deposit using either vat, like whole ore vat leaching, or flotation. And we see the potential now, based on that, to have two economic flow sheets to recover this material. So, our view now, it's definitely going to be worth trying to prove up multiples of that 1.5 million ounce historic resource. But we want to do it in a separate vehicle. We get a very different investor audience for this, but we also want our shareholders to maintain that upside. So the goal in 2024 is to spin out the Sugarloaf deposit. We're looking at the various ways to do that. But it would ultimately come down to the shareholder vote. If the shareholders would vote if they want that spin out. But the idea would be that for every share of AMC you hold, you would get a pro rata share of Sugarloaf. And as you know from looking at valuations of these, that these deposits are not getting very high valuations in the current market, but in a good market, the cyclical nature of these things, these can get extremely high valuations, especially if you can show the potential for multi-million ounces, over 3 to 5 million ounce deposits, which I think we can definitely show that here. I just try to run through a few questions here. I got a question. Why did we not start the plan of operations sooner? Well, this is a sequential permitting process, so you cannot just produce blanket plan of operations where you say disturb the whole area. You have to show a rationale and some evidence of mineralization, and that's what we have now. The Western and Central drilling programs have given us very good indication of mineralization. What we're seeing mineralization, and our rock sampling program covers the whole property, and we are seeing, we've already published some initial results here. You can see these outcrops to the west are showing very high grade copper, 3 to 5, and I think even one case we got 8.6%. You can see there in outcrop. That goes into the plan of operations where we demonstrate that this is geologically worthy of going through the process, and it's We work with the permitting offices. They've been very good to us. Unfortunately, there was a slowdown during COVID where they didn't have enough people in the office, but it's staffed up again, and things are progressing smoothly to date. So I just got to see how much time we got for more questions here. Yeah, and another question here. So you can you not do any testing outside of K until the plan of operations is ready? No. As I mentioned, we have 12 other pads where we can test the majority of these targets outside of K. The area to the southwest that's open, that would be a prime area for additional pads under the plan of operation. But before that happens, we can test almost all these targets that you see in the black ellipses. And I mentioned the northwest target. There's a number of ways for us to tackle that. One is amending the NOI, and the other is doing longer drill holes. But we'll make decisions on those final plans once we have the final rock grid results. We can then correlate what we see at surface to what we see underground in the western and the central drill holes. So I'm just reading the questions here. Got another question. We've only got a minute left. Thoughts on the valuation. What are investors missing about AMC? Well, I think the thesis hasn't changed. It's only getting better. We have one of the highest grade, only remaining copper gold VMS deposits left in the world. Many of these were mined out in the late 70s. The few that are left, if you look up the few that are still operating, they tend to be very high margin, very low cost operations, and that is what we're trying to prove K up to be. Exploration potential. I think the market is obviously impatient, but we really have only drilled very few meters. We've only drilled 4,000 meters at the central target with one good hit already. And only 7 holes, and then the western target only 8,000 meters with one very good hit. I think from an exploration standpoint, that would be an extremely good ratio of hits to misses. So we've got some very good targets to follow up, and importantly, we have the budget. Compared to your typical exploration company, we're very well funded to do this work without coming back to the market to dilute our shareholders. And we also, I'd say, have excellent liquidity compared to, what you're seeing at the bottom of like what I consider to be the bottom of the cycle now. This is really the time where you can accumulate positions in good companies that have taken hits to their share prices. But anyway, I think I'm out of time here. If I've missed any questions, please send me an email. I'm happy to set up a call if anyone would like to ask anything in more detail. So I'll leave it there.